Next up on the stage, we have Marc Ducler from Astral Resources. As Managing Director of Astral, Marc has led the company to where it stands today, on the cusp of becoming a long-life, low-cost, 100,000 ounce per annum gold producer right here in the heart of the WA goldfields. Marc has more than 30 years' experience in the mining industry, including senior, operational and executive roles. Prior to joining the company, Marc was previously Managing Director of Egan Street Resources until his successful takeover by Silver Lake Resources in late 2019. Thank you very much, Marc.
Cheers, thanks very much, Christian. Big thank you to Diggers and Dealers for giving us another crack here on stage today. Obviously, this is the third day of a grueling 3-day conference, so I'm assuming the attention spans are going to be short. So I'll start with just 6 of the key points that I really want you guys to lock in on. Number 1, we have 1.8 million ounces in resources across 3 emerging hubs. 2, the new ounces that we've added, 1.5 million ounces, have been added at less than $20 an ounce in discovery cost. Thirdly, we now have 1.1 million ounces in reserve as part of the pre-feasibility. 4, the pre-feas, which we only put out 6 weeks ago, shows that this project has a 100% internal rate of return, a 1-year payback, and a net present value of $1.4 billion when you're using a gold price of $4,250 an ounce. 5, we are currently working on the DFS and we will deliver that by June of next year. And finally, we're still drilling. We've got 2 rigs turning on site today and we expect to continue to grow at that sub $20 an ounce in discovery cost. Corporately, this is a relatively well-funded business, $90 million in the bank as of the end of the June quarter. And we do have the opportunity to bring in another $6 million from OPIs that are expiring in October, and they strike at 14 cents. So the gold price has been on a tear. Momentum has certainly swung back towards juniors and developers. Last year we were trading at 7.5 cents. Today we're more than double that. Again, last year we had 8% institutional holding. Now we're approaching 24%. So at a corporate level, all the right things are happening. We are building a really solid foundation for which we can then launch and accelerate towards development as we look to build our multi-decade gold mine. So pretty much 70 kilometres from where we stand today, we have our Mandilla and Spargoville projects. Only 14 k's from where we are today, we have Feysville. So this is very much the heart of the Kalgoorlie goldfields. It's an area with potable water, gas pipelines, grid power, mining camps, airstrips, and as any of you that were here over the last 3 days would know, just from the amount of vendors here, every major WA mining and maintenance contracting company actually has a presence here in Kalgoorlie. The pre-feas demonstrated multi-decade mine development, 95,000 ounces per annum for the first 12 years, and it has some very, very strong financials. When we actually put out the pre-feas, I've spent a fair bit of time overseas, over East, and over Zoom, and we've had some really good support, met over 75 institutional funds. One of the questions I got was, where do these assets come from? So we have put out this little timeline just to give a bit of background. So it starts off with some soil geochem in 1988. That identified what was to become the Paleo Channel at Mandilla, and then the Hestia and Thea fresh rock deposits. So 1989, WMC drilled the Paleo Channel, and then the following year in 1990, they drilled arguably what was then to become the Thea fresh rock deposit. Post that initial discovery, WMC got pretty busy. They had high-grade nickel and gold closer and on the Lake Lefroy, and so Mandilla was effectively put on the back burner. Anglo-Australian Resources, which was the precursor to Astral, came along in 2003 and bought out the assets for $500,000 with a view to drilling out the Paleo Channel and mining it. They did mine that successfully. It actually produced 20,000 ounces at 7 grams per tonne. Again, the company that asset got put on the back burner, and then when we came along in 2019, just post 2019, we came along. We started to look at these assets from the perspective of a bulk low-grade mine. We recapitalised the company. We set about removing what was a pretty ugly royalty when you think about it, 4% NSR, 10% price participation. For every single dollar, the gold price is over 600 bucks Aussie. and then we got busy. Now, I probably bang on a little bit about location, and that's because I really feel location matters. And the advantages for us are very plain to see. This is reclaimed pastoral land. It's now vested with the Crown. The water table is hypersaline, and there are no competing beneficial uses for this land. So whilst it doesn't remove the permitting risk, it certainly goes a fair way towards minimising it. Our process plant, mine offices, workshop, heavy vehicle, go bay, they're all going to be located less than 500 metres from the Coolgardie-Esperance Highway. That is the main freight corridor that actually joins the eastern states to Western Australia. Within that corridor, you've got gas and you've got potable water. Now, our assets are also located 25 kilometres from the town of Kambalda. Fantastic facilities, a 320-man camp. Rather fortuitously, it's got about 250 rooms vacant at the moment, and it's got its own all-weather airstrip as well. And again, as I mentioned before, every significant mining and maintenance contractor that you want to be talking to have facilities right here in the city of Kalgoorlie-Boulder. This ultimately will make for a lower risk CapEx and OpEx development. So just some highlights from the pre-feasibility: 95,000 ounces per annum, 12 years, 1.1 grams per tonne. Then we treat low grade for 6.5 years. So we are approaching that multi-decade mine, 18.5 years worth of life of mine. All-in sustaining costs are sub $2,100 an ounce, which is actually very competitive to our peer group. Peak negative cash flow, $227 million, $180 million for the process plant, non-process infrastructure, tailings dams, and throw in some contingency, and then $47 million for that initial pre-production mining. It's a simple, large-scale open pit. Thea has a strip ratio of 5.5 to 1. The financials are incredibly robust at a $4,250 gold price, $1.4 billion in net present value, $2.8 billion in free cash flow, 1 year payback, 100% internal rate of return. We're basically here to ensure that we successfully develop this project. That means you have to de-risk it. If you see a problem, you cut a plan, you fix it. If you see a risk, you put in place some mitigating actions so you can move forward. One of the risks we had is the available tenure to build Mandilla was lacking. We recently completed a transaction for Maximus Resources. That's fixed that. If I look at it through a really simple lens, I'm a metallurgist, not a mining engineer, but when you're doing open pit mining, it's about moving the least amount of waste you can and hauling it the shortest possible distance. This new design post that Maximus transaction allows us to do that. As a bonus, you get 139,000 ounces of pit-constrained resources and 144 square kilometres of prospective tenure that we are currently drilling. If you actually have a look at that image, that there is the old Wattle Dam gold mine. It was the highest grade gold mine in Australia in its day, 210,000 ounces at 14 grams per tonne. That's a stone's throw away. So this Spargoville tenure we are now drilling. So in April this year, in the lead up to the pre-fees, we updated the resources for Mandilla. By early May, we'd actually restated Maximus's mineral resources, and that gave us a group MRE of 1.8 million ounces. Our organic growth to date has cost less than $20 an ounce in exploration costs. With the release of the pre-fees, we have demonstrated that 95% of our resources convert into a production target at Mandilla, and 86% of the resources at Feysville convert into that production target. The resource to production target conversion rate is incredibly high. So the read-through, we're getting some pretty good research coverage, so the read-through for our analysts that I want them to really start to understand is be confident that if it actually qualifies as an Astral resource ounce, then at a very high percentage, it will convert into a mineable ounce and will end up in our production target. So a couple of slides on Mandilla. The mineralisation at Mandilla is hosted within this large granite intrusion. There's 4 deposits hosted there now: Thea, Hestia, Eos, and Iris. As I said, Wattle Dam, stone's throw away. Then 20 kilometres to our east, you've got the 20 million ounce St Ives gold camp. It's a very good region for gold. You could argue it's prolific, and it is inconceivable to us that we will not continue to find more gold and be able to continue to grow over time. This long projection is from that resource update in April of this year. The most recent diamond drilling that we did, we returned 400 gram metres across the holes that were drilled. It was our best program to date. We also hit some pretty high-grade structures. So in one hole, 2.5 metres at 170 grams per tonne, 10 metres at 28 grams per tonne, 25 metres at 4 grams per tonne. The probable reserve for Thea alone is 829,000 ounces, and we converted 99% of the indicated ounces in Thea into that probable reserve. That production target for this pit, 1.1 million ounces out of the total 1.2 that we've currently discovered here. So a 96% conversion rate. We've got 13,000 metres of drilling planned here at Thea, 10,000 metres of infill for the stage 1 pit, and then a 3,000 metre program where we're targeting these high-grade structures. That infill program actually started yesterday, so that's underway. Now, it's also important to remember this is the only plus 1 million ounce open pit deposit within 100 kilometres of us. We have our neighbours, we have Evolution, we have Goldfields, we have Northern Star. This is the only plus 1 million ounce deposit from open pit other than the Super Pit and Red Hill, both of which are Northern Star operations. And it is the only one that still belongs to a junior miner. Now quickly, just having a look at Feysville. Feysville for us has always been about the higher grade gold and trying to find that gold and using it to displace Mandilla. This tenement package is 14 kilometres from where we stand today. There's 200,000 ounces at 1.2 grams per tonne. It actually contributed 132,000 ounces of mine production as part of our pre-feasibility. When we were here last year, we said we wanted to target between 75 to 100,000 ounces at 1.1 to 1.3. So we certainly landed right in the middle of that. This additional cash flow is actually really, really meaningful when you look at it, and it really highlights the value that these satellite hubs can have as you feed them into a Mandilla process plant. We are currently drilling at Spargoville. When that program wraps up, one of those RC rigs will move over, and we've got a 7,000 metre program to follow up some of the regional and also to continue to expand Camperman. So looking ahead, we've completed over 9,600 metres of drilling across Feysville, Iris and Hestia. We are currently drilling at Spargoville, so we've drilled, I think, 8,000 metres. It's a 13,000 metre program now because we've actually extended it. And then as we finish that, we've actually got another 5,000 metres because as part of the Maximus transaction, we've actually got a lithium joint venture. So we've got another 5,000 metres of regional drilling to do there, which will also provide us with some pretty cheap gold assays as we're drilling those. We've actually planned and committed 20,000 metres across Mandilla and Feysville, and that is currently obviously underway. So our commitment to growth is plain to see when you actually look at the metres that we are going to be putting into the ground. From a project perspective, that DFS, we have committed the June quarter of next year. We will be looking to interview the DFS engineering partners that we've actually gone out to market for. So they've submitted their tender documents. We'll be interviewing them next week. And so we are still on track to appoint that DFS engineer by the end of August. Permitting for Mandilla, we expect to get our works approvals we'll get the works approvals submitted within the next month or so, and then the demers approval, so that's basically your mining proposal and your native veg clearing permit. We'll look to put them in December of this year. And the reason that's actually pushing out to December is following the Spargoville transaction, we actually need to do one more spring survey. So once that's finished, then we'll be in a position to submit those proposals as well. From a native title perspective, we've had some live discussions going for some time. We would expect to be able to execute an agreement on native title for Feysville this coming quarter, and that will pave the way for the mining tenements at Feysville to be actually granted. So from DFS to a final investment decision to construction, this schedule is actually exceptionally tight. We want to deliver the DFS by the end of the June quarter. We want to be fully funded a month after that, and we want to hit the ground start building the following month. So there's a few things we will need to do to compress that, which will also include doing a lot of that front-end engineering during the DFS phase. So it's a tough schedule, but it sees us producing gold in the December quarter of 2027. So to finish off, we are well funded, $19 million in the bank and another $6 million worth of OPIs that we should be able to bring in come October. The pre-feasibility that we delivered, it was on time and it was within guidance. It is what we pretty much spoke to the market about, and we will deliver this DFS by the June quarter of 2026. And we are certainly funded to achieve that outcome. We will continue to drill and we will continue to grow, and we want to demonstrate that growth of that $20 per ounce in discovery cost. We are focused on de-risking our mine development. It might be actually boring work, but it's essential for us to actually move through to that. So the institutionalisation of the register, the transaction for Maximus Resources, the infill drilling that we're currently doing, all of those things are essential so that we can be confident of our ability to successfully turn on this plant in that December quarter of 2027. These projects, they're located in the Kalgoorlie Goldfields. This area is infrastructure rich. It has really strong community support. The local government support is really strong also. And it has a navigable regulatory framework, one that we are comfortable to operate within. Conventional mining, conventional processing. It's as simple as this stuff can get. I made a comment at a pitch yesterday. I won't repeat it because it's definitely a pub comment, but it's very much about how simple this project is. The pre-feasibility shows that Mandilla prints cash, $2.8 billion at a $4,250 gold price. It's close to $4 billion if you're using the spot price of just over $5,200 today. As I said, this development timetable is aggressive, but we are focused on seeing first gold by December of 2027. Thank you.
Thank you, Marc.